to the downside. You see, the moment we had that breaks of structures to the downside, we would have realized that, you know, this dealing range, this new dealing range that was formed, this dealing range low, that dealing range high, was broken where? Was broken right there. And hence that will be our dealing range high that we broke, and hence this will be our new 50-minute break of structure. If you don't understand, guys, tell me in the comment section. I'll try to dumb things down like Jeffrey Dahmer. Okay, so we had a new dealing range low because it's the last point, last low that before last buy to sell to break, last sell to buy to break that 15-minute break or whatever structure. And internally we had breaks to the upside, and we haven't yet had any retracement to the downside. Since since we have mitigated the H4 supply like, guys, the way supply has to be written like this, not a U, supply. But anyway, I didn't mean to write this. I was planning to write a U, and you can see from the keyboard the Y is near to the U. But anyway, so we are waiting for this break of structure, for this market structure shift here of the 15-minute. Because why? Because we mitigated the supply zone. Yeah. And we can see that we had this thing, we had a shown of weakness of, or a shown of strength, not a weakness, a shown of strength for the market to go bearish. On this high was higher, this week was higher than this week. You can see, hence the market had made a failure move, or a failure leg to break the structure. Hence that failure might show that the market has strength to go to the downside. So what I'm waiting for is for the market to come, break the structure there, and come to mitigate, break the structure there and come to mitigate some supply zone, 50-minute supply zone. Once we hit that 50-minute supply zone, I'm going to go internal to the 2-minute or the 1-minute or 5-minute or 3-minute to look for my entry, right? From my breakout, for my market structure shift or breakout structure, and then the mitigation of the 2-minute whatever to go to the downside, right? That's what I'm waiting for. If we don't mitigate, if we don't break the structure, I'll anticipate that price will likely just go break that structure up and mitigate the 50% of that, of the H4 supply zone, to break or continue to get out of that supply zone to another one, to see if we can be given a confirmation, a 50-minute confirmation showing the interest of the market to go to the downside by this break. This break will be our H4 confirmation entry, and we'll be waiting for the market to come and mitigate a 50-minute supply zone, to start selling bearish, right? And the same as here, the same that we saw here. We saw firstly this accumulation phase. After we accumulated our sell orders, we went on to mitigate. We went on to do our manipulation, which we are anticipating a displacement leg to break structure. After breaking structure, we would like to mitigate a supply zone to head down to target this liquidity below, this liquidity, and furthermore, right, to target our H4 week lows, right? So that's what that is what I'm anticipating in the H4, right? Okay. So we haven't yet had our 15-minute break of 15-minute break of market structure shift to the downside. So currently we are still in this internal 15-minute dealing range. We are in this internal dealing range, and we did mitigate 50% of that dealing range here with wicks, though we mitigated with wicks, not with full body closures. So we might price might come to mitigate this demand zone right here. So guys, now I follow rules. My rules are telling me that we are still within this dealing range, 15-minute dealing range, hence we are still bullish. The moment we will start turning bearish is when we break this low. But the moment we break this low. If we break this low, that will be also a minor confirmation of that we might shift structure to the bearish side, but I wouldn't take it serious. But I wouldn't take that serious because if it breaks the structure and does its whatever here and does this, I'll take an entry. A 2-minute. I'll wait for a 2-minute break of structure to come and mitigate my 2-minute demand zone to head to the upper side, or to come and target this liquidity at the upper side right there, and mitigate 50% of that whatever. So the target will be 50% of the supply, will be this 50% of the supply and that top. But if we break, that's when I can realign myself with the H4 and start and wait for my 15-minute break of structure. After having that break of structure, wait for my 15-minute retracement levels to come and retrace and do their accumulation phases right there. To do their accumulation phases right there, and then break structure in the 2-minute and give me a nice entry to the bearish side. Right, that's what I'm anticipating at this current whatever. So I'll save this whatever and see what we'll have in the future. So yeah guys, currently we are in the Volatility 151s. We are in this internal, in this, no, not internal, in this 15-minute dealing range. So this will be our 15-minute 15-minute protected low, 15-minute protected low, and this will be our 15-minute week. Yeah, it's a week high again. Week high. Hence our target is there currently in this trading range or dealing range. So let's wait for price to come and mitigate here, and wait for our confirmations in the 2-minute and see if we can take an entry, or never give us, or price will not give us an entry confirmation right there, and we'll continue to come and break this bearish whatever. Let me see if we have another dealing at the demand zone in this. We don't have any other demand zone. We don't have any other demand zone except order blocks that I'm not interested in. I'm interested in demand and supply zones, because that's what I'm trying to teach right now. We'll move to order blocks in the next video, whatever. So yeah, 15-minute, we're in this dealing range. H4, we are in a bearish dealing range. This one, which we came out of this external dealing range. This one. this leg, press leg. We tried to mitigate, but we never reached 50% of this external dividend range, but we went on to break. We made a small break, so maybe this might be a grab of liquidity to go to the upper side, but to me, mechanically, according to my strategy, this was a break, since we had a full body closure outside of this H4 week low. Hence, it was weak, so we expected it to be broken, obvious. So we shouldn't be surprised. Hence, even this one, we're expecting it to be broken, so we wouldn't be surprised if it comes back to break it without mitigating the supply zone and further supply zones there, which are already mitigated, hence not that useful. But anyway, that's all for the Volatility 151S. I'll do other videos for other instruments, synthetic indices, instruments, boom, crash, jumps, whatever. I'll try do those things and post them on YouTube and on Facebook. Thanks guys for watching. Risk management, money management, and other things that I told you are very important for you to be successful in this market. Risk, a lower percentage. Risk, your risk management has to be very good. Risk lower percentages in your accounts. In Deriv, I usually risk 5% because it's my account. I know that I can recover 5% if I lose it. In my prop firm, not in my prop firm account, I risk 0.5%, and once the account grows, I transition to 0.25, no, 0.5, 0.75, then to 1%. 1% is the maximum that I do. I don't go further than that in my prop firm accounts. The lowest that I can go to is 0.12. After I'm from 0.25 if I'm in a drawdown. Once I'm in a drawdown, I'm going to 0.25. Once I'm going further in a drawdown, I'm going to 0.12. You see? Hence, I am preserving my capital. But I'll teach you more about those things, and I will make a video on making a trade plan, and I'll make an example trade plan that we'll use for our examples that I'll be posting. Entry examples, to show you the inner workings or the workings of that machine. Oh, yes, of the machine, me myself, and of the 3-box methodology or 3-box system or 3-box structure. Thank you guys for watching. Goodbye.